McLeod Russel is a stock on our radar, especially given the fact that they have sold off a couple of their tea estates over the last 2 days, garnering an amount of over 400 crore rupees. It's something that's got the street as well quite excited, because we have seen an uptick as well come by on the counter. So let's chat about that, about what the outlook is for tea in general, given that, there is an output surge seen in certain geographies across the world, Kenya especially, which did recover from a lull. We have with us Mr. Kamal Baheti, the CFO of McLeod Russel, joining us now on the show. Mr. Baheti, good afternoon. Thanks so much for joining us on ET Now. A nice chunky sale of a lot of your tea estates. Now, in fact, it's given you more than 400 crore rupees. What else is on the block? Are we going to see some more tea estates being sold? How much do you hope to raise in total via these sales? And, I know that one of the points where you do want to deploy these funds is debt reduction. So what do you want to reduce your debt to?
No, in fact, as we have stated earlier in our stated position, the last board meeting, the outcome of the board meeting itself, we said that we have got our total debt size of around 1,000 crores. And by the end of the year, we would like to reduce it by 50% to around 500 crores. So the total debt reduction plan was around 500 odd crores. We have done two agreements to really sell the tea estates, which will may take another few months before it really get concluded, worth 470 odd crores. So we are almost there as far as meeting our target is concerned. Of course, we need to utilize around 100 crores for buyback or shares.
Okay.
So there may be few more which we need to identify. We don't have anything in the offing immediately.
Okay.
But I would say that what we have planned for is almost nearer to what we have achieved. And this is what we wanted to achieve, to really rebalance the overall business orientation of the company. And this is what we have explained in the board meeting note as well.
So 470 is what approximately you've garnered. Of course, about 100 odd would go into the buyback. So you're almost there to reducing your debt target. You spoke about reorienting your business. I understand that the rationale is also behind selling off your tea estates is also to reduce the tea output from your own estates. Why is that? Why do you want to change the proportion of tea from own estates versus outside?
So when you look at the last 3-4 years, this has been a cycle which has been a down cycle for tea, other than the last year when we started looking at the prices going up. And the current year, the first 2 months is very encouraging on the prices, which are up by around 15-20 rupees. But if you really look at the company per se, we have got 67 million which comes out of our own production, 20 million we make out of the small gross list, and 30 million comes from overseas. And in a down cycle, our own production, where most of the cost is fixed and the wage cost keep on increasing, actually comes under pressure, and that weightage was much higher. And board actually takes this kind of recognition every year. In 2009, we went into overseas and bought leaf, and now we thought it is better to really look at downsizing a little bit on the on size and look at the fourth segment where we had not been operating, which is the packet tea segment. So this is what actually had been the rebalancing which we wanted to do, where we could reduce around 15-20 million kilograms from our own, come back to around 50 odd million. And then we have got 20 million from small growth and 30 million overseas, and then gradually grow into the packet tea segment, which will give great balance even in the down cycle going forward. But it doesn't mean that we are negative on the tea cycle per se. We believe that the tea prices have turned the corner. Last year we had seen increase of around 10-11 rupees for us. This year opening level had been pretty encouraging.
Actually, Mr. Baheti, you answered my question. I was going to ask you exactly that. That does it mean that you're a bit negative on tea prices, given that, you want to sort of hedge yourself from the volatility in prices? I want to talk about your own business now. If we look at the highlights of FY18, it was marked by a huge improvement in your international business. Uganda, etc. did see a lot of growth. So what led to that? And in FY19, will this trend persist?
See, this is where the rebalancing is required. If you really look at last 2 years, it is the overseas business which has given the maximum. Last year, overseas has done record profit. They did around 19 odd million of EBITDA. And in India, our small gross has kept on contributing. That is a variable cost component which continues to really contribute 20-30 rupees per kg on 20 million. It is our own tea which has actually suffered because of the cost increase and price increase not commensurate. So, I think even in the last year, the major impact also came, of course, because there was some crop drop in Kenya.
Yeah.
Even in this year, Kenya has recovered the crop, but they are as compared to the last year, because of the drought, they are recovered. So international prices continue to be very strong, particularly for the areas in Rwanda and Uganda. We are continue to really do very well as compared to similar to the last year. So, this year also overseas looks pretty okay. The only encouraging thing which is now happening is that now India is catching up on prices. I think India has not done well in the prices in the last 3-4 years. So I hope that this trend continues going forward. And maybe this is next couple of years is going to be a defining period for the tea prices in India as well.
Okay, but domestic business was disappointing. There was a decline in the volumes. I guess it could also be attributable to all the turmoil in Darjeeling. What is the situation over there? And given the fact that you have sold off some of your tea estates, could there be pressure in volumes in FY19?
No, volume has not been lower. Volume, actually, we did produce 4 million more than the previous years because the weather had been pretty okay. Even the prices are up by around 10-11 rupees per kg. But it is the cost, the wage cost, which has been increasing every year in the last 3-4 years. So that has really had the impact. Normally, in the cost increase, the price is commensurate. Last 3-4 years, it did not. Reducing the volume, it will impact as far as the overall volume is concerned because we have sold certain tea estate. Of course, it will. But will it impact the overall profitability? As I said, the last couple of years, this particular segment has not contributed much. So it is not going to impact the profitability as on the basis of the last year. Of course, if the prices go up, we will really make money on the balance 50 odd million which will be left with.
All right. Mr. Baheti, we'll leave it at that. Thanks so much then for joining us. We wish you all the very best on your debt reduction plans as well. They're on their way to, in fact, cut it down by almost half from 1,000 crores to 500 crore rupees. And he also, in fact, spoke about international operations. FY18 was a strong year. The question is, of course, how will FY19 shape up? Well, that, of course, was McLeod Russel buzzing in trade yesterday, today as well. We will, I think, slip into a short break right here on the show.